Greetings, everyone. Welcome to the Wednesday, April 16th, 2014 episode of Free Webinar Wednesdays. This is Eric Cook with WSI Internet Consulting, where we work with businesses and organizations on helping them better understand and leverage the power of the Internet as a strategic business tool. You can learn more about me and WSI online at www.poweredbywsi.com. With me this week is not my good friend and Free Webinar Wednesday partner, Mr. Jeff Simpkins. He is actually off-site and unable to join us, but I do have JP Nicols with us as our guest speaker. And we're going to go back to my banking roots, and we're going to chat a little bit about innovation in the banking sector and how we can go about kind of tying those two together. But before I get started, you may hear some squeaking in the background. I got a puppy in the office, and she apparently has found a squeaky toy. So as soon as I get my introduction done, I'm going to go ahead and hide that from little Lily and make sure she doesn't bother us for the rest of the session. But before we get started, I want to also remind people, and this is a first, JP and I have our webcams enabled. And I think this is the first time we've ever had webcam, and just checking to see, first off, if you guys are actually seeing it, because we've turned it on and JP and I are seeing each other. So we're not even sure whether the audience has the ability to see us. So if you want to use your chat feature, which is the next thing that I'll talk about, if you would like to ask a question or post a comment during today's session, please use the chat feature, which is located in the upper left-hand corner of your screen, and I'll be monitoring those. So you'll be, if you're seeing my my head, you'll be seeing it going back and forth my screens, checking the chat feature. And then lastly, this session and all sessions are recorded and will be made available out to freewebinarwednesdays.com. So with that, and I do see that we've got some people that are actually saying that they can see us. So had I known that we were going to do video today, I would have put a tie on, but at least I've got a clean shirt, so that's a good thing. So with that, let me go ahead, JP, welcome you to the show, and thank you for joining us. I'm going to go ahead and send the presentation controls over to you. And
Great.
While JP gets those, I just mentioned I had the pleasure of meeting JP a couple of weeks ago out in Tucson, Arizona at the Western Independent Bankers Association's Directors and Senior Management Conference, and had a great conversation. And anytime I can talk to a banker that thinks not necessarily like a banker, it's always a fun chat. And JP, with his position over at Bank Innovators Council and some of the other stuff that he's doing, really pretty cool. And so glad that he's able to join us for the show. And with that, we see your screen. JP, thanks for joining me on Free Webinar Wednesdays.
Well, great, and thanks for having me. And you know, it's interesting now. I'm trying to get this into display mode, and it here's the classic live television, live broadcast here. GoToMeeting is the topmost app, and it doesn't want to give me the ability to do the PowerPoint here in broadcast mode. Let me figure out how to change that, and we'll jump right into it.
Sounds good.
Yeah, let me try this. Let me.
And yes, David, it is Dressed on Wednesdays.
Yeah, I was going to say, you know,
yeah.
there's very little you could do to get me to wear a tie anymore. So.
Yep. Even at the last couple of conferences that I've presented at, I've forced myself to go a little bit more business casual, and trying to leave the tie at home. So. Although I didn't take the stage with a Nike T-shirt on, but it was a little more casual than the suit and tie like I've been used to as a banker for 15 years. So.
Yep. So, well, I can't figure out how to actually take control of PowerPoint here. So I'm a little concerned about the ability to see anything other than the title slide and the things on the side. So that's the bad news. So you're all about the technical tips here. What am I?
Yeah, exactly. You're going to ask the technical expert how to do this.
Yeah, so. Live. Welcome to the live tech show here. We're going to figure this out together.
It's been great seeing you. Yeah. So I guess if you can just kind of page through the slides, we can kind of make do with it, and that'll just give us, you know, I know we can't get into presentation mode, but we can see a case for banking, and if you can
Yeah,
please go to the second slide.
well, I can't even do that. Oh, here we go. I'm at least touching the screen. I couldn't like GoToMeeting was like the app taking over everything, and I can't even. So at least I can touch the window now, so I can wave it around. That's as close as we can get to it. But I can't seem to. And see, if you can see my whole screen, you can see it says Finder. It doesn't even say PowerPoint. So I wonder what happens if hey, we might have figured it out. Sort of. At least says PowerPoint. And I assume this is one step in bringing up the screen live. So, well, while we're waiting for this, I'll just tell you a little bit. I spent 20 years helping a small bank become one of the largest in the nation, most recently as Chief Private Banking Officer. And one of the things we thought about, and it could be our poll everywhere that was giving me fits here, but hopefully are you able to see the screen now? Okay.
We see it now. We're being way too innovative. We're doing web sharing. We're going to do poll everywhere. Talk about jumping in with both feet. So,
but that's one of the things about innovation. Yes, that's one of the things is you try things, and it's okay if they don't.
Want to deliver.
Work. Yeah, because you figure it out over time, right? And so, hey, there I am, and I really saw the need for more innovation in banking. I saw so much happening outside of banking, and we'll talk about the Bank Innovators Council at the end here and exactly why we started this. But what I thought we'd do today, Eric, is just kind of take a step back and think about why do we even need to have innovation in banking. And I would argue that the leaders that we have in our industry today have come up somewhere in this era, right, from the early 80s through 2007. And that era was marked largely by rising asset prices, falling interest rates, and all of which happened in an era of deregulation. And then 2008. And the thing about 2008 that I really want bankers to think about and understand is it wasn't just a bad year. It wasn't even just the start of a rough patch. For the industry internally, both of those were true. But there were some other things happening, some exogenous factors too, that I believe marked 2008 as the start of a whole new era. And that's one of the reasons why innovation is more important now than ever. So should we think about this? I use a pretty familiar lens. Any of us that have taken Business 101 probably learned about Porter's 5 forces. And the way I think about this is starting with supplier power. I think that regulations are a pretty good proxy for supplier power. Now more than ever, regulations can tell us what kinds of products we can sell and to whom and when and how, and increasingly even for what price. Now this is 9 months ago. In June of 13, we hit the 3-year mark since the passage of Dodd-Frank, and at that point, each word of the law had created 42 new words of rules, and we were only 39% complete. Last month, we actually passed the 50% barrier, so we're halfway there, folks. Only halfway done through Dodd-Frank, passing these new rules, making these new rules that those of us in the banking industry will have to live by for the rest of our lives. So that's a part of this new era. We're in an era now of re-regulation, not deregulation. The threat of new entry.
Hey, JP?
Yeah.
Just a quick note. We typically get a lot of non-bankers as well as bankers on free webinar Wednesdays, and for the non-bankers, and I'll see if you can do this, but can you provide a brief overview of what Dodd-Frank is and kind of what it means to bankers, just to kind of give some perspective?
Yeah. Oh God, no.
Yeah. There goes the rest of the hour, right?
Yeah. Not only can I not do it, I don't want to do it. You can't make me, and it's not really very interesting. But no, I think even the most casual observer knows that after the depths of the crisis, lawmakers look to what can we do different. I think in many cases there were good questions asked. In some cases, there were good answers provided. But it's really, really tough to just create a whole bunch of new rules when what really, and I'm not even going to talk about the crisis, but it's a whole bunch of new banking reform laws, all of which are designed ostensibly to make the banking environment safer and less prone to the kinds of ripple effects that the last crisis sent upon really the entire global community. Things like the way assets are accounted for on the books and the kinds of liquidity that banks need to maintain. And but I think for our purposes today, it's sufficient to just say there's a whole lot more regulation going on right now, and I think again, if you're not in the world of banking, this slide is a really good one, and it just kind of describes, so you pass the law, but then you have to create rules out of those laws. So, okay, what does this law mean? How is it interpreted? How are we going to enforce it? And you can see here 15 million words of rules already created, and it's over 20 million now for bankers to interpret and understand and train around and follow. So it's a really big deal in the banking industry.
Yeah. So if you're at your next networking function or chamber mixer and you want to bum a banker out, go up to him and say, "So how's that Dodd-Frank treating you?"
Yeah, I mean, whole departments are started for in banks to understand, keep up with the new rules as they're coming out. There's a whole list. That slide, I don't know what happened to my credit there, but I didn't make that. That comes from a law firm called Davis Polk. And if you're a real glutton for punishment or you like this kind of stuff, go to davispolk.com, and they have a whole Dodd-Frank section, and they actually keep track every month of which new rules were made, how many of them are behind the deadlines, how many of them don't even have an estimated time frame yet. So anyway, the whole point is describing the environment of banking today, and re-regulation is part of it. This is another part of it, the consolidation. We have half as many banks today as we had 20 years ago, and I don't believe it'll take 20 years to have it yet again. Normally, lack of new entrants is considered good news, but I don't think it is in this case. This has been very Darwinian, and so there's a huge concentration. The top 10 banks control about 80% of the assets, so those that are left are bigger and stronger and more formidable competitors than ever before. So this is a part of the dynamics when we think about the banking business. But what I think is really profound is when you start to look outside of the industry and look at things like buyer power. Our customers today are more knowledgeable, more powerful, more empowered through things like social media and blogs and wikis and search engines to find more information than they were able ever to have before. And their expectations are changing. This is a chart of a part, at least, of the so-called Internet of Things, and increasingly we expect our things to talk to one another and to work together. And I'm struck not only by its complexity, but the lack of financial services here. Financial services is embedded in every one of our lives, whether you work in the industry or not, right? You have money, you save money, you spend money, you move money around. And I think there's a lot of room to grow here, and the banks have a lot of catching up to do. And it's not just via apps and devices, right? The data is exploding. As much data is created today every second, sufficient to recreate every book and magazine ever written 200 times every second. So it's a massive amount of data that's exploding everywhere. And I always say that banks invented big data, and yet what a horrible job we've done with it. We know how much money you have, how much money you owe, what comes in, what goes out, where it goes, and we've done very little with giving you any useful information around that. And I think this is both a threat, but also a very interesting opportunity for banks that can harness this. It's not going to get any easier. Yeah, go ahead.
One of the things I always thought as a banker, and it always amazed me that, when we take a look at our customer and they fill out a mortgage application, with the exception of maybe going to the doctor's office and the doctor knowing everything intimately about you, the banking industry really has more information about their customer than any other industry, and especially from a competitive perspective, you know, you're putting your information in that loan app that you're trusting the bank's going to do something responsible with it. Obviously, we need that in order to properly underwrite it, but there's no other industry that really can get their customer to willingly provide information as to, you know, what other checking and savings accounts do you have loans with other institutions, you know, what your debt levels are, what your credit score is, and how you can go ahead and to be able to use that for good. I think really presents opportunities for financial service providers, not just banks, but hopefully banks will pick it up, to be able to go out and proactively offer things to their customers, because you know everything that there is to know about them if they've got one or two key products with you. But it's just not being done very, I guess, frequently or commonly or effectively at this point. And that's obviously what you're hoping to change with your Innovators Council and some of the work that you're doing. So.
Yeah, no, I think that's right, Eric. And in terms of how society is changing too, you know, look at this massive amount of wealth, this proverbial $41 trillion with a T, that will be passing down from the baby boomers, assuming they don't spend it all, to Gen X and Gen Y. And the tipping point could be as early as 2018. That's just 4 years away, where X and Y together will have more money than the boomers have. And they're certainly behaving a lot different. You know, it's funny, I hear some people talk about, oh, Gen X, you know, the kids. Well, you know, Gen X is the oldest ones are approaching 50 right now. Those are not kids. Those are people in their peak earning years. And same thing, Gen Y in their early 20s now at the peak of, or the leading edge of that generation. So these are real live consumers with jobs and incomes and assets and liabilities, and they're changing the face of our society and the way we're consuming financial products and other products too. The banking industry, I say, and you put this in the headline of your webinar too, that the industry has been undefeated for 400 years, but we won every one of those games with an asterisk by default. There really was no competition. Sure, we had large banks and small banks and credit unions and S&Ls, but those are all really just slightly different flavors of the same thing. And now suddenly we're in the era of the downloadable bank account and the downloadable money manager, the app on my phone that can manage my assets. So this threat of substitution is something that's really different, and the pace of change is faster than ever. It took 38 years for radio to reach 50 million users, 13 years for television, 4 years for the World Wide Web, 2 years for Facebook, and just 18 months for a device we had no idea what it really was, the so-called tablet. Instagram took 7 months to reach 50 million users. It's not even on this chart. It's changed so quickly. So the ability for change to take place throughout a society and for an industry to be behind, look no further than BlackBerry is a great example. There wasn't that long ago that everybody had a BlackBerry, wanted a BlackBerry. It was the preferred method of mobile communications, particularly within large corporations and especially within banks. And increasingly, that's largely given way to bring your own device, and that's a lot more Apple and Android devices these days. So as a bank, we were used to, in the last era, thinking of our competition as other banks. And what we did, was it good enough compared to what the bank down the street did? But increasingly, our customers' experiences and their expectations are shaped by players outside of banking, folks like Amazon and Apple and even Uber and Netflix. The ability to have a custom designed experience, and knowing me and knowing what I like and what I want and when I want it, and anticipating my needs and being able to share that anywhere, anytime, in just about any way on any platform. And think about consumers who live their lives with this and, you know, dozens and dozens of other companies, and then stepping into the typical bank branch, if they do in fact even step into the bank branch, because increasingly they're not. So let's see if this works here. Speaking of our innovation, there's a company out there called Movin', and I'm curious to know And it doesn't look like the poll's loading, so we may just skip right through this part. But when I give this live, and particularly I love the baby boomer population of the bankers to say, what do you know about moving? And it's a 1 to 5 scale. Never heard of them to, yep, I'm a customer, and maybe somewhere in between. I've heard the name and might know a little bit about them. And then the answer is, oh, now here comes the poll afterwards. I see it popping up in the corner. So we'll deal with that. But Brett King, who many people know is the author of Bank 2.0 and now Bank 3.0, he was there we go. So now I'm giving you the answer, but you can still vote. If you have your phone ready, you can text the appropriate number next to your answer, and you text it to 22333. So you can text one of those things. I've never heard of them. I've heard of them, and I'm not really sure what they do, at least prior to this slide. I have heard of them, and I have a pretty good idea of what they do. I have heard of them, and I have a very good idea what they do, or maybe you're even a customer. So we'll see if our live polling is working here. But anyway, Brett King was the 2012 Bank Innovator of the Year by American Banker. They received $4.1 million of funding. And I'll see if I can move this. Hey, there he goes. It was described by Wired, Forbes, and the New York Times as the bank of the future. So very interesting. Hey, there we go. Somebody's voting. So one person has heard of them.
Hey, we've got an interaction.
Yeah, that wasn't you, was it, Eric?
Yeah. No, it wasn't me. You would have seen. Yeah. I see. That's the thing. And now that I got audio, I have to pay attention. I have to be careful if I'm, going to do anything with my nose, because the rest of the world. See, you just did a scratch there. Yeah, gotcha. Yeah. Yeah, that wasn't me. If I was texting, you'd be able to see. I'd be pulling out my phone and doing my. So we've got a couple people now that are doing some interaction. So this is groundbreaking stuff here, folks, on Free Webinar Wednesdays. We've been going for almost 3 years now, and not only do we have webcams, but we're doing interactive text messaging and all sorts of cool stuff. So innovation at its best.
Well, and thanks to those folks who are honest. I've never heard of these guys, that's not surprising. I mean, I hear that a lot. I was just with somebody yesterday, a decidedly baby boom white male, classic, bank manager kind of guy. Never heard of this company either, and had no idea of this kind of thing. So you can see below on the bottom part of the screen. They also have a sticker you can put on your phone to make it wireless. Because we all don't leave the house without our phone. You can tap and pay, and you get instant feedback. You get kind of context around where did you spend your money. They'll instantly categorize it and so on. So how about Simple? So same thing. So the poll seems to have moved off of this page and onto the next page. So that's something for me to iterate and fix for next time. But we'll see if the poll pops. Yep, here you go. So again, prior to seeing this slide, what did you know about them? Again, the answer goes to 22333.
Yep.
Yeah, go ahead, Eric.
On the Movin' slide, when you go back, we got a question. Is Movin' actually a bank where you can make a deposit and you get checks from them and they do loans, or is it more of an access point to your existing bank information?
Yeah, very good question, and this is true of both Simple and Movin'. Both of them started with bank in their name. Simple was originally called Bank Simple, and Movin' was originally called Movin' Bank. And they both took that out of their name, I think partially by some regulation and also partially by their choice. At the end of the day, if you really want to be coldly cynical about what they are, both of these are nothing more than prepaid credit cards. With a mobile app kind of built around them, or debit cards actually. And so they both are built on top of other banks. Simple is built on the Bancorp Bank, and Movin', name's escaping me, but it's a very small bank in Oklahoma and we'll talk about kind of different roles of banks in the future, but they're really just the back end of this. So some people call this a presentation layer. But what a good one it is. And again, you can see similar. Look at this kind of context around where you were, what you spend. Simple is famous for having something they call safe to spend. And so they really looked at people who had experienced problems around things like overdrafts, Banks have taken a lot of criticism around that banks make a lot of profit on overdraft fees. And so being able to say, nope, safe to spend, or you can set budget categories. Hey, you were supposed to spend no more than $50 a month on Starbucks, and this is $138. That would be my message. I live in
You've been
Seattle,
looking at my account, haven't you? You've
been
looking at my account, haven't you?
Well, I'm here in Seattle, and when I worked for a bank, we had, I kid you not, 3 Starbucks in the same building, at different corners and floors. So Simple was founded in 2009 in Portland, Oregon. They received $15 million in funding. They had 10,000 customers, and I'm sorry, I have a typo in my own slide. It was not 2013, it was 2014, just last month. They were sold to BBVA for $117 million. So one of the ways banks are innovating is they're buying the innovators. We sometimes call them acqui-hires, right? They hire these folks. Okay, we've got one more quiz coming up for you, and we know the slide won't come up till the slide after. So get ready to 22333, and I'm curious if you've heard of Wealthfront. So here's another company, Wealthfront, and again to 22333. You can text these following numbers and relative to your familiarity with this company, at least prior to now. And Wealthfront was founded all the way back in 2008, so they have a massive 6-year history now. They've now raised $30 million in funding. I think that's old too. I think they just had another round. They made a big headline last year. They crossed $500 million in assets under management. And they started, this is 2013, they started 13 at $250 million, so they doubled their assets. And then $700 million was as of first quarter. They tacked on another $200 million just in the first quarter of this year. Now, the great big asset managers would say, oh, believe it or not, that's not a lot of money. But based on this rate, they will cross $1 billion in assets under management this year, and $1 billion here, $1 billion there. Pretty soon, we are talking about real money. The thing I really like about Wealthfront, and there are plenty of competitors. By the way, this isn't the only company that does this. They're one of about 12 companies, and just today, I saw Michael Kitces wrote an article. Some people derisively call these robo-advisors, and Michael Kitces just wrote an article, are we actually in a bubble? Too many of these people. I don't know. But if you look at Wealthfront and look at who their customers are, the #1 employer for their customers, or the top 10 employers at least, include Google and Facebook and Twitter and LinkedIn and PayPal. And so when you think about skating to where the puck is going, and so many of our banks talk about, well, our families include the family of such and such of the Ford family, or the whatever it might be. You're part of the world there, right? Might be the Fords and some of the other scions of the industrial age. Right? We're past that now, and where do you want to be, right? So very interesting how these things are changing. So, all right, well, that sort of works. So glad we did our live polling.
Well, the results of that last one kind of mimic that's the one that I had not heard of. I assume one of the competitors that could be loosely lumped in with a company called Personal Capital.
Yep.
Which very similar. I know it's advertised. I subscribe to a weekly podcast show with Leo Laporte on This Week in Technology, This Week in Google, and they do a lot of talking about Personal Capital, and you sign up for free, and it aggregates your information and helps you kind of get a better feel for your investment. And then their monetization strategy is they can make more intelligent recommendations for you based on knowing your full financial picture, and they will monetize off of those additional products and services that you offer, as opposed to charging you for the actual service. So if you don't use any of the services they recommend, you're a zero-income customer to them, but their hope is that they can make some intelligent recommendations, because they're now basically getting you to provide big data. And Credit Karma is another one that was actually, I think you and I were both in the session out to Tucson. Very similar free credit report, but you're giving them the information so that they can make intelligent recommendations on opportunities to refinance a high-interest credit card, or consolidate your loan balances. But it all revolves around what you said early on, was big data and what they know about us, and can make an intelligent, logical recommendation to make us, better from a financial perspective.
Right. 50 years ago, the fear was robots would take away all of our blue collar manufacturing jobs, and the reality is, what robots are really taking away is these these brain power jobs where we've got better algorithms for some of these things. Now, Personal Capital, I've got their app. I'm a customer. I aggregate my portfolios with them as well, and I haven't. I'm a non-revenue customer for them. I'm not having them manage it for me today. Not saying it wouldn't happen, but they actually have human beings too. So does LearnVest, right? They've got live certified financial planners and portfolio managers. So it's not merely technology; it's technology driven and technology centric. But for folks that say, well, I really want a human to talk to, they have that too. So it's not all about technology, but technology is certainly a driving force. And the amount of money, I talked with each of those three companies, it's just examples of the kind of money that they've raised. And the total money raised last year was almost $3 billion, according to Accenture. And that's tripled since 2008. So remember, part of what we're talking about here is why we're in a new era. So many of these companies are designed to put a bank out of business. Many of them are solutions that they actually want to sell to banks. And I find it's kind of surprising how many banks aren't even aware that companies like this, there are, in not any of those three examples, but there are very, very similar companies who you can hire and white label. So our take is we don't think...
You could almost buy Snapchat for that.
Almost. Our take is we don't seem to be taking this very seriously. If you look at the Booz and Company Global Innovation 1000, you look at where R&D spending is happening, banking doesn't even show up, or financial services don't even show up as an industry. It's lumped somewhere in that other, about 2%. And so it's probably not shocking why banks don't really show up on the list of most innovative companies. And I'll go through this fairly quickly. I do a longer version of this sometimes when I give talks, but I think this is fascinating. You think about Encyclopedia Britannica, founded in 1768. It was the epitome of curated knowledge. Imagine their horror in 1993 when a software company just down the road from me here, a software company, says, you know what, we can disrupt that business. We'll just put all this on a CD-ROM and then eventually begin packaging it in their basic in their software. And you can see the chart. It created this long decline, and it actually Encyclopedia Britannica responded pretty quickly. They were online just a year later in 1994, but it was too little, too late. But the part I find fascinating is, Microsoft actually shuts down Encarta in 2008. And the reason why is listed right in the middle of the screen there, because Wikipedia. If I would have told you that I wanted to start an online encyclopedia and we're not going to pay the editors, we're going to have people that choose to join and crowdsource this, and we'll put Microsoft's Encarta out of business, which in turn had just about put the death knell or the final nail in the coffin of Encyclopedia Britannica, you'd have told me I was crazy, but some people do say Jimmy Wales is crazy. But what an amazing story. So, and the point here is, again, we're thinking about banking. Well, that won't happen to us. They always need us. You're always going to need a bank. And I think the way to think about it is people will always need banking services. You may or may not need a bank. So there's a really good book out there, almost 20 years old now, The Discipline of Market Leaders, and they argue that in any industry there's really three main domains, and you can't dominate more than one of them. So are you going to exceed at product leadership or operational excellence or customer intimacy? And a few years later, Hagel and Singer in the Harvard Business Review came out with a similar study. They just used a little different terms: customer relationship management, product innovation, and infrastructure management. Certainly have not led in product innovation, and I'm not sure they ever will. I believe they should really focus on customer relationship management. But if you look at how banks have behaved around this, I think the reality is most of them has focused on the infrastructure management. And I'm getting a little ahead of my own animation here, but if you look at Hagel and Singer talk about what the characteristics look like, and if you look down the right column, infrastructure management, high fixed costs, make large volumes essential, the battle for scale and rapid consolidation, cost focused, stresses standardization, predictability, and efficiency. I think that's exactly how we've managed the industry. And that might be okay if that's all you want to be, is kind of the utility. The problem with being a utility is you kind of become a dumb pipe. And I mentioned the banks that are behind, Movin and Simple, and they've chosen that route. And there's nothing wrong with it, but they did it consciously. What I worry about is banks that don't make that choice consciously, and they'll end up there unconsciously because they're not really focused on customer relationship management, which is really highly service oriented, and not just in smilier tellers and better policies, but I think it's about really being customer centric in the very way you design your products and your services. I wrote about this last year in American Banker. I talked about the dumb pipes and how banks can avoid that fate of the dumb pipes. And I looked at the utility industry, telephones in particular, and look at how we've evolved, even the marketing, right, from pin drops now to screenshots. And the point about that is a dumb pipe is merely just a way of moving dollars or data from point A to point B. What really matters and where the profits really are is the quality of that information that you're moving through the pipe. So now 80% of the mobile traffic is data. It's not voice any longer. And the phone companies that have survived have figured that out and enabled that through a whole bunch of methods. And I think a similar analogy is happening in the banking space, where, again, just having a bank and an ATM network and a branch network and employees and the ability to underwrite and make loans and all that stuff, those are just table stakes competencies. That's not really driving a lot of value, and it'll drive increasingly less value in the future if you're not really customer centric about it. So what we say at the Bank Innovators Council is it's hard to innovate within banks, and it's even harder doing it alone. So we founded the Bank Innovators Council, which is a free membership organization that helps support, promote, and facilitate innovation within and amongst our member banks. We launched barely 6 months ago during Finovate Fall. So those of you that may not be familiar, Finovate is the world's leading financial innovation technology conference. They do 4 a year, East Coast, West Coast, US, plus Asia and Europe. About 70 companies will demo in back-to-back 7-minute Shark Tank style demos. No Q&A, no slides, no canned video. Just look, this is the problem we're trying to address, and here's how we do it. So during Finovate Fall last fall, we had this idea that those fintech companies have a lot of support. We just talked about the $2.97 billion being invested in them. They also have accelerators and incubators, and we thought the banks really need some support. The largest ones can afford their own innovation teams, but most can't, and we need a way to bring them together. So we rented a rooftop in Manhattan and threw a party. In classic startup fashion, that was what we would call our minimum viable product. Let's throw a launch party and see if anyone cares. Well, we filled the rooftop and got written up in American Banker, so we were off and running. And we did an event. Actually, we continued to have an alliance with the folks at Finovate. So we followed them to London and did what we call a Bank Innovators Lab Day in London in February, and we've got one coming up at the end of this month, April 28th, before Finovate Spring in San Jose, California. So this idea has grown well beyond our expectations. We became global without trying. We now have members in 35 U.S. states and 51 countries. Our members range from small community banks to large global banks and just about everything in between. And our folks are really pretty diverse in terms of their day jobs. Some are frontline managers and product managers on up to CEOs and senior leaders that are really just looking for new ideas and good ideas. So we're really excited about it. And if anybody on this call or those listening afterward are interested, our web address is right at the top, bankinnovatorscouncil.org. It's free to join, and If anyone's going to be at Finovate, we hope to see you out there. So we do what we call workshops and lab days, and they're not lectures or demonstrations. We really roll up our sleeves and work side by side. These are all actual pictures, other than the guy writing on the glass. That's a great stock photo we use as a part of our branding. But every other one is a real live photo from our event in London in February, and we'll have a whole list of new ones in just a few weeks after we do this on April 28th in San Jose. So we've gone from the dark days to what we see as a much brighter future as we move on from here when we innovate together. And I always like to say there is always plan B. We could just wait for something magical to happen.
It's when you get somebody like Walt Disney on your board and he does some fairy dust and everything just magically gets better.
Exactly. Yeah, if we could just hire the right person, hire the right consultant, we can make everything better. So
exactly.
As we say, that concludes my formal remarks, and love to just have a little bit more conversation, or even take more Q&A if there are any between now and the rest of our time together.
Yep, absolutely. Yeah, so we've got some questions. Remind me to also ask you about the LinkedIn group, but we'll come back to that because I want to make sure we get the visitor questions. Does the council meet for these innovative sessions outside of Finovate? Are there any specific events that you hold, or do you just coincide those with Finovate at this point?
Yeah, that's great. So again, in our whole giant 6-month history so far, we did a couple of small workshops in Boston because the private bank Brown Brothers Harriman invited us there, and we did some things there. Finovate was a natural partner for us because it's like-minded people. We're actually, immediately after this call, actually, I'm talking to another major conference that invited us to be a part of it, to co-locate with them. One of the other things I didn't talk about is we have a chapter in Australia. We never thought about chapters. Someone that was engaged with what we're doing said, hey, can we start a chapter here? And we said, sure. And so part of our growth plans will be to kind of do that. So if you're interested in kind of running a local chapter and having events like we run through meetup.com, we run the Seattle FinTech Meetup, and we kind of consider that loose outgrowth of the Bank Innovators Council. Or if you've got something going on in your city and either you want to do it on your own or you want us to come out and do something or workshop, we can do that too. So I think we know we're onto something here, and we've got some pretty exciting plans on how to take this further, including we're working on now a institutional membership where banks can join us as an institution. And what we'll do there is that will help us build our research capabilities. We have some research partners that we're working with, and whether that's access to research that's already been done or the ability to commission specific research around, hey, we want to understand something better, right? Who are our customers, and what kind of products are they using, or we want to build a mobile wallet, right? Whatever those kinds of things are. So,
cool.
My contact information is up on the screen. I'd love to hear from you if we'd be happy to work with you in any way.
Absolutely. Another person asks, do you have any events that you would recommend for FinTech on the East Coast? Because Finovate out on the East Coast isn't until the fall, and it sounds like they're not going to be able to make the one on the West Coast.
So sure. Yeah, so June 11th and 12th is the U.S. premiere of Next Bank. So nextbankusa.com for more information. Tickets I may not even been officially out. I actually have a secret link that you can save 20% because I'm actually on the advisory board of Next Bank USA. So email me if you'd like to go to that. Next Bank is kind of the TED Talks of banking, so they're not going to talk about Dodd-Frank and capital liquidity and all that kind of stuff. It's really the intersection of design, technology, and banking.
Really fun.
Yeah, and actually next month I'm speaking at Next Bank Asia in Singapore, so they're all over the world, and increasingly the Bank Innovators Council is partnering with them globally. So that's one. There's another great group we're friendly with called InnoTribe. And they are hosting their big conference called Sibos Also in Boston. It is in September, I believe. It's also in the fall. So I don't have the date right in front of me, but same thing, email me and I can get it to you. There's a group called Bank Innovation, bankinnovation.net. They usually are on the West Coast too, and they just had their conference a few weeks ago here in Seattle. And then there's a great FinTech meetup group, actually, and there's a hackathon going on. So if you go to meetup.com and look for FinTech in New York, and same thing, I can introduce you. I know most of these folks. There's a good group there, and they have an event coming up. And I think part of what they're going to do is a hackathon, where they'll actually put people in a room and kind of work on some problems together.
Not necessarily hacking bank websites and trying to steal data, but working on actually solving problems and hacking through the issues.
Thank you. Yes. That's a phrase that can mean a couple of very different things. Yes. Yes. Yeah, they mean in a good way. Yeah.
Exactly. Ethical hacking. Good, positive hacking.
Yeah. So, hacking meaning finding new ways of doing things, not getting into your stuff.
Being innovative. So, any chapters or events planned in Canada? We get some international attendance to Free Webinar Wednesdays, which is great, and anything crossing the border to get up to our friends in Canada?
Somebody just introduced me to somebody in Toronto, and so no immediate plans. Would be happy to do so. One of the things, of course, in Canada is you have a lot fewer banks. So you've got some big, strong banks that do some pretty good innovative stuff. One of the things we assumed when we started this is we'd be most relevant to smaller banks that didn't have or couldn't afford their own innovation teams. Turns out not so true. And we do have a couple of Canadian banks, both TD and CIBC, off the top of my head, I know have among their employees are our members. So be happy to go to Canada. So nothing planned at the moment, but happy to do so.
Cool. Point of clarification, I think my hacking comment caused a little bit of a buzz. Somebody makes the comment that they've seen hackathons, but they don't have any coding experience. Would it still be relevant to them? This isn't really computer coding as it is programming language. It's more, hey, we're going to get in a room, we're going to talk about an issue or come up with some ideas. And the hacking really isn't computer coding and programming as much as it's brainstorming and ideation and coming up with ideas. And is that a correct statement?
Well, it can be both. Can be either or both. And so yeah, I would say email me and I'll put you in touch with them. Or again, just search under meetup.com and look for New York FinTech. There's also a great one in the Bay Area. In fact, they've the one in the Bay Area has expanded. They're at fin-tech.org, so fin-tech.org, and they're kind of create what that grew out of the Bay Area FinTech meetup, and they actually did a real hackathon. I think maybe that was just last night, looking at the APIs, the application programming interfaces. That are out there for financial programs and coming up with new ways of doing things. But yeah, all of the above can happen. And sure. And so anyway, fintech.org is setting themselves up to be more of kind of a global clearinghouse, so that the New York folks and our folks in Seattle and anyone else who has one or wants to start one, they can kind of list their event there and so on. But so I'd say, yeah, if you're a programmer, great. There's room for you there. If you're not, that's great too. There's plenty of opportunities for you there too. And our thing, by the way, is not at all about programming at all. It's really about design thinking and thinking about our customers and the kinds of needs they have and how they're being met or not met by what's out there today.
Cool. Looks like one last question, and then we'll get to LinkedIn, and that'll probably take us right to the top of the hour. Somebody says that they work in an industry that's related to banking, but they're not a banker, and if they wanted to join Bank Innovators Council, do you have to be part of a bank, or can you be somebody that is either interested in banking, or do you have to be recommended by a financial institution, or does the bank itself join? How do they join your Innovators Council?
Sure. Today it's free to join, and all are welcome at bankinnovatorscouncil.org. Just free to sign up, and all you really do is just give us your email address and tell us what you do and where you work, and you'll be on our list. As I mentioned, we are building up institutional level, bank level memberships that we'll be working on today. We focus on the bank side because we do have a majority of the members that are bankers, and that's the way we want it. But 100% would not be a good thing, because we welcome the new perspectives from folks on the edges and outside of the industry.
Cool. Good. And then lastly, I'll get to ask my LinkedIn question. You and I both did quite a bit of promotion for this, and I put notes out into Google Plus and Twitter and Facebook and LinkedIn, and found that you've got a Bank Innovators Council LinkedIn group that you can request membership to. I don't know if mine's been approved yet, but I did click the button, so hopefully you'll say yes and let me in. But any other special requirements to that group versus subscribing to you guys through the website?
Yeah, no, actually, not only I approved you personally, not only are you approved, but I believe it was in that same session that I actually opened it up. So you no longer have to request. We ran that as a closed group for a little while, just to kind of keep a handle on who was joining and what do they look like and everything. So we just kind of took the the gates off of that right now. So right on LinkedIn, if you just search for Bank Innovators Council, you'll find our group. And in all cases, what's really important, whether it's through our website, at our events, or in our LinkedIn group, we want a safe, curated environment. So we don't want sales pitches. We don't want people coming in. We don't want human spam, as we like to call it. We want people that really want to engage in real conversation. So we do moderate the comments and that sort of stuff. So outside of that small caveat, really all are welcome, and we'd love to have anybody join us.
Yeah, well, very cool. Well, good. Well, I must have missed that approval with all of my other promotional efforts, but since we've met, you know what I look like, and now everybody else on Free Webinar Wednesdays does too, thanks to the nudging of firing up the webcams and getting that to work. So we've certainly cut some revolutionary ground today. So I guess in the last 5 minutes, anything else that you'd like to kind of summarize, wrap up, suggest, or offer kind of as a closing food for thought?
Yeah, one of the things that we're learning is this word innovation. Folks like you and me are excited by the word, and we lean in when we hear it. But we're learning that not everybody feels that way. It's a scary word to a lot of people. I have a blog post coming out this week in the Deluxe Forward Banker blog about that. And really, I want to reframe it. Innovation is just about new ways of creating business outcomes. And that could be creating new products. It could be finding a better way to serve your customers, which makes them happier and they stick around longer. It could be a way to cut costs. And so I think it's easy for people to kind of hear that and either not understand it, and especially if you're a banker, feel like, wow, that sounds like risk, that sounds like things that the regulators won't like, or as I put it in the blog post that's coming out, I sometimes get this idea that there's a little smirk in there like, oh, that's nice that you have the luxury of doodling and playing around with gadgets, but I run a real business, Sonny. And there was a great video just posted yesterday by McKinsey & Company with Eric Ries, the author of The Lean Startup. And he talks about the need to innovate, and companies like BlackBerry and Kodak, and the hundreds of companies that were once leaders that failed to keep up.
Blockbuster.
Yeah, Blockbuster, Borders, right? And I think he does a really nice job of addressing it. So I hope I enjoyed this, and thanks for having me. And whether you're a banker or not, whether you're an innovator or not, I hope what we've done is just inspired some people to kind of think differently about, I need to think about new ideas in my business, and there are lots of ways to do that, and you don't have to do it alone.
Cool. Well, good. Well, JP, thank you so much for joining us. I'm bummed out Jeff couldn't be here, because I'm sure he would have loved the conversation too. He comes from the data center side and worked with a lot of banks in his career, and I'm sure he's going to love catching the replay on this. But I want to encourage everybody. JP's info is there. Reach out and touch him. Tell him that you saw him on Free Webinar Wednesdays. Literally saw him. I've said that before, but we've never had webcams before, so it's always been, heard him on Free Webinar Wednesdays. but just so that he can connect the dots and know where you came from. And we'll get the recording up online. Encourage you to watch it again and share it with others in the industry, and just hope to get the word out. So thanks again, JP. We really appreciate it.
My pleasure. Thanks for having me.
Yeah, cool. Well, that brings another episode of Free Webinar Wednesdays to a close. We'll look forward to seeing everybody next week, Wednesdays at 1 p.m. Eastern Time here at freewebinarwednesdays.com. Until then, have a great week, everyone. Bye-bye.